So Scott, we've been getting a lot of questions on the new tax bill. We're hearing some people say Social Security is not taxable anymore. We're hearing people talk about how tips and overtime are not taxed either. Shed some light on this.
So the first change I want to mention is a new deduction for seniors. Originally, there was a lot of talk that Social Security was going to be non-taxable. That's not how the bill ended up. So what they have is an above-the-line deduction up to $6,000 per individual, which goes up to $12,000 for a couple. There are phase-outs for this, so it's not available to everyone, but it does present a lot of new planning opportunities.
Mm-hmm. Yeah, in the comment about the no tax on tips and overtime, there's definitely that benefit, but something to keep in mind is there's a limit to that exclusion. You can only exclude up to $25,000 if you're married filing jointly for overtime, $12,500 for singles. And so the benefit's there, but if you're someone who maybe half of your income is overtime and you're a high income earner, you won't experience that full deduction or full exclusion for overtime. It's capped at $25,000. And just like the deduction you were talking about, there's a phase out for that as well. Once you get up to the $300,000 for married filing jointly, that could change over time, but something to keep in mind.
Yeah. And finally, the one thing to remember is they've now made the tax law from 2017 is now permanent. So back then when they moved it from 15% to 12% and 25% to 22% on those brackets, that's been made permanent. Now we know in Washington that it doesn't mean it's permanent. If a new Congress comes in, that can definitely change. But right now they don't have to keep going back and getting it approved again. So.
Yeah. Yep. So it's one thing to know these changes. It's another thing to try to implement this in your planning and know how you can plan around these things. Give us a call if you want help thinking through this. We'd love to help.